Two insurance plans. Same coverage. But one costs almost double. So what are you really paying for? Because hidden inside that price difference could be the one thing that decides whether your claim gets approved or denied.
Welcome! Today we are going to crack the code on a big health insurance puzzle. We're putting two of the most popular plans out there head-to-head to figure out what's really going on with their wildly different price tags. Okay, so let's just jump right in. Take a look at these numbers. For the exact same 10-lock cover, HDFC Ergo is charging almost double what ICICI Lombard is. I mean, we're talking about a difference of over 7,000 rupees every single year. So what gives? Yeah, that's the big question, right? Is HDFC just charging for its brand name, or is ICICI maybe hiding some sneaky conditions in the fine print? You know, the kind that pop up right when you need to make a claim. That's exactly what we're going to find out. So here's how we're going to figure this out. We're going to break it all down, starting with the most critical factor of all, their claim records. Then we'll get into the fun stuff like coverage boosts, we'll look at the waiting game, and finally, flexibility, before we land on the verdict to help you find your perfect fit. All right, let's get into what I think is the most important part of this whole thing, the claim record. I mean, think about it. When you're actually sick, the last thing you want is a fight over the bill. You just want to know, will they pay up? So how do they compare? And whoa, right off the bat, you can see a huge difference. HDFC Ergo is settling almost 97% of its claims. ICICI, on the other hand, is just over 85%. Now that 11% gap, that's not small. For you, that number is basically the odds of getting your claim paid without any hassle. Now, if we dig a little deeper, some other things are pretty similar, like the amount of money they pay out versus what they collect. But here's where HDFC really pulls ahead again. Its hospital network. With over 13,000 hospitals, it's a solid 25% bigger than ICICI's. That makes a real difference in your chances of getting cashless treatment, especially if you're not in a big metro city. So for round one, it's pretty obvious. When it comes to the number one thing you buy insurance for, actually getting your claim paid, HDFC comes out swinging with a strong lead. All right, next up, let's talk about coverage boosts. Because a 10-lakh policy doesn't just stop at 10 lakhs. This is where things get interesting, because both plans have these really cool ways to stretch your coverage way beyond that base number. HDFC's plan is kind of like a fortress with 3 layers of protection. First off, the secure benefit. This is awesome. Your 10-lakh cover literally becomes 20 lakhs from day one. No hoops to jump through. Then your coverage actually grows every year, even if you make a claim. That is a fantastic and pretty rare benefit. Now, ICICI has got a really powerful counterpunch here, something called unlimited restoration. If you use up all your coverage, they'll restore it, again and again, for different illnesses in the same year. You can see how that would be a lifesaver in a really bad year. And you can also add a booster to beef up your bonus right from the start. Okay, so this one is really, really close. That unlimited restoration from ICICI is phenomenal, but that immediate, no questions asked doubling of your cover from HDFC is just so simple and powerful. It gives HDFC a slight edge, but just barely. All right, let's move on. Section 3, the waiting game. And this is a big one, especially if you or a family member has a pre-existing condition. The question is, how long until the policy actually covers everything? You know, when it comes to the standard stuff like the initial 30-day period or specific illnesses, it's a total wash. They are exactly the same. They both follow the industry standard, so nobody gets any points here. But here's the cool part. What if you do have something like diabetes or high blood pressure? Waiting 3 years can feel like an eternity. Well, both companies offer an add-on that basically lets you skip that 3-year line and get covered in just 30 days. That is a game changer. So yeah, on waiting periods, it's a dead tie. They're practically identical, right down to the solutions they offer for pre-existing diseases. So this round is a draw. Okay, next up, let's talk about how much you can actually tweak these plans. This really gets to the heart of their different philosophies. Are you a build-it-yourself person, or do you want something that's ready to go right out of the box? And if you love having options, oh man, ICICI is for you. They have over 29 different add-ons you can use to build your policy exactly how you want it. It really puts you in control. And we're not talking about small stuff here. You can add things like getting cashless treatment anywhere in the world, or even an infinite care add-on. Think about that. Unlimited coverage for a serious illness. That is some serious peace of mind. HDFC, on the other hand, goes a completely different route. They only have about 6 add-ons. Their thinking is, hey, we've already packed the base plan with all the heavy-hitting features you really need, like that double coverage we talked about. It's way more of a what you see is what you get kind of deal. All right, we've been through a lot. We've looked at claims, the bonuses, the waiting times, all of it. So let's bring it all home. The big question: which one of these is the right fit for you? And look, the honest answer is there's no single best plan for everyone. It really comes down to what you value most. ICICI's Elevate plan, it's probably a perfect fit if you're, say, young, pretty healthy, and really want to keep that premium low for now. You get a solid base, and you can always add more features as your life changes. But HDFC's Optimus Secure, that's felt for someone whose number one non-negotiable priority is that claims settlement record. Maybe you're covering a family, and you just want that rock-solid, all-inclusive package from day one. That higher premium, you're basically buying an extra layer of certainty. You know, at the end of the day, that's really what all this is for, isn't it? All these features and numbers, they're just a means to an end. And that end is feeling secure, knowing that if something goes wrong, you and your family are covered. So I guess I'll just leave you with this one thought to chew on. Now that you've seen the trade-offs, which one gives you more peace of mind? Paying a lower premium today or having a higher guarantee that your claim will get paid tomorrow?
Because the cheapest plan doesn't feel cheap until the day your claim gets rejected. If you want more breakdowns like this that actually save you money and protect your future, hit subscribe now. Because one smart decision today can save you lakhs tomorrow.